The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to a special Valentine's Day edition of the Power Trading Hour. Sorry about that, folks. And what makes it special? It's me. I'm always lovable and squeezably soft, as you know, if you listen to the beginning of this show. So anyway, what do we have going on today? Well, markets are up again on very light volume as we check in right now. Just make sure we've got it in at 207. Up 9 points on the S&P cash. And what do we have for volume? Less than 1.9 billion shares. I was going to say a little less than 2, but even less than that, 1.92 billion shares means that we're coming up on very light volume, coming up into a weekend. And what does that mean? It means that a lot of the people that have been short are being squozen out. And that means that if we do have a down move, normally you can get a little bit more violent because there's no natural buyers down there, or at least a lot less natural buyers. So we've moved up here about 9 points. Earnings have been coming out. About 40% of the S&P 500 have been making their numbers, so not even half. So why are we moving back up? Well, I think it is a flight to quality. We've been talking about stop clocks this week, Elliott Wave being one of them yesterday and throughout the week. Another one will be Joe Granville. And he did have kind of an interesting way of looking at it. He was right once, pretty much wrong the rest of his life. But he will be famous because he was right once. And it's unclear whether or not he actually started the big downdraft. But what was that? Early 80s, 82, 83, something like that. Maybe I'll get a chance to look it up again in the break. He happened to live in the same city I was at. He used to come in the store I worked at. And interestingly enough, he didn't talk about trading, but he was an interesting dude, let me put it that way. As they say, knew how to sell the sizzle, not the steak. And one of the introductions to knowing that if you are a bear, there's always someone willing to believe in the end of the world. I'm not always looking down. I just know that there is only one right side of the market. It's not the bear side or the bull side. It is just the right side. But we're going to look at that. But I think just about anybody can say that we've gone back up, at least back from 100 points lower on light volume, especially the last 3 days. Another thing is that on 3-day weekends, it is not uncommon to see a change in the market in its, how can I say that, in its character. And I think we'll see something when we come back next week. At least that's what I'm banking on. So as we're looking at coming into a weekend, I have 3 positions on in the daily newsletter and none in the Tech Insider, my longer-term newsletter. I think that's going to rapidly change into next week. And probably coming back on Tuesday, the snow will be gone, the traders will be back. A lot of people will probably be hung over a little bit too much on the Olympics, and we'll probably get back to thinking about trading just a bit more. But as I look at it, I think the action starts coming maybe late Tuesday, probably Wednesday, as we change. And you just spend any time with the charts and go back and look at any big 3-day weekend over the summertime, and you can see if the trend doesn't change, certainly the volatility tends to. It's called the rule of alternation. If you've had a market that's been very choppy, a lot of times it will get very straight. If it's very straight, it'll go back to being choppy. But normally you get a market that's either up one way, it comes back the other way, and the trend, at least the character, if not even the direction, tends to change. There's some ideas that, especially in the summertime, we see our relatives and maybe when everybody gets together and voices their opinion about whether the direction of the country is going right or wrong, people get more bearish or bullish. But kind of hard to tell. We always like to start off the show, or at least the first part of the show, talking about history, because, of course, if you don't know your history, you're going to be forced to relive it. In 1934, the New York Stock Exchange prohibits its members from participating in stock pools or organized groups of brokers who gang together to drive the price of a stock up or down regardless of demand from general investing public. It's one of the few reforms of the New York Stock Exchange that it adopts voluntarily after the Great Crash of 1929. Interestingly enough, there's a lot of discussions about this in Jesse Livermore's book, A Reminiscence of a Stock Operator. A lot of people believe that because he ran stock pools, he was only successful because of that. And I tend to disagree, mostly because books around that same time showed other things. But basically, with his lack, they took out a lot of leverage after the crash, and after he made the equivalent of about, $300 million? I think it's $300 million in today's, well, even in, I guess, no, it's $300 million in money at that time, being short in 1929. But they did change a lot of the laws, what he could and couldn't do. But he was probably one of the most famous bipolar men of the early 19th, is that the 20th century? Early 20th century. I always say that if there would have been lithium, he would have owned the world. When he was on, he could not be stopped as a trader. And when he was bipolar, he could, and manic, he couldn't give his money away fast enough. Actually, just a fantastic book. There's several of them, and I've read them all. And even some of the books of people that were around him, like Wyckoff, and some of the other people that were big in that time frame. I got a hold of some of the articles that were in the Journal of Wall Street. I think that was the name of it, that Wyckoff wrote. And he writes a lot about Grant and Keynes and some of the other guys that were wandering around Wall Street at the time. The big men of the street, as they used to say. But today in history. Now, guess what we have? All new dark pools. They call them stock pools back then. They're called dark pools now of trading. And probably another thing we're going to need to get rid of sooner rather than later. Somebody said Livermore must have been a ton of fun around the house. I do remember that when the great crash came, his wife had basically gone and found all the jewelry she had and brought it to him and said, well, I heard about the big crash. Here's all our jewels, because she was so used to his manic depressive spits. And she thought that because the market had went down, that they lost all their money. And he kind of had to tell her that he was probably the richest man on Wall Street at the time, making $300 million in 2-3 months, 4 months, something like that. But he said, go ahead and put all your jewelry back. And at that time, though his wife forced him to put some of the money aside for all the kids in a trust that he could not touch ever again, and they all had money. In fact, when I was growing up in Hawaii, one of his sons lived not too, actually on the same street as I did. Of course, I didn't know at the time who he was. Some people said that he was kind of related to a big money bags kind of guy, but just vaguely remember the kid. I think that would have been his grandchild. So what am I thinking? I think the kid was like either a year older than or younger than me. I can't remember having him in the same class we had. But Obama went to the same school that I did, and I didn't remember. Of course, I didn't remember him being in there. So a lot of people floating around there. Obama, Jesse Livermore's grandchild. But those guys were all pretty much taken care of. But I digress, and of course, this is the most digressing show at TFNN. We've won so many awards for digressing. But up 9.5 points on the S&P cash, 1.97 billion shares. So we are going to have a very light day as we come in to the closeout here. And I'm watching my positions. And actually, the one we put on this morning pretty much cratered. And I'm wondering how many people, of course, we've got the free demo of the newsletter. I'm wondering how many people hopped on that this morning and maybe caused it. But it is down 2% already today. So a good start to our latest position. Of course, I don't suspect that 2% is anything that's going to change my view of taking any money or that the trade's already a success. It's just nice to go home at least and see something like that. But I think there are some stocks starting to crack now and some other things going on. Across the pond, other than Portugal, not a lot of action. Normally Germany stacks up 0.7. UK was kind of flat. France is up 0.6. But basically same thing. We had light volume on most of those markets going into the weekend. Polo went to the high school. He's either, was he a year younger than I am? He's a year younger than I am. I didn't know that he went to the same school as I did. Of course, there was only one school there, so probably not a big surprise. But my brother was watching some show, and he goes, hey, you went to the same grade school he was. My brother was 4 years older than me, so I didn't know he went to a different school. But, yeah, he would have gone to the same school that I did. No, I was not born in the same hospital as Obama. I was born, my mother bore me in Texas. So, and, a little bit different. But there's a big story to my birth and me being born by my mother. But we'll get into that another day. Other things of interest out here besides the euro, probably the one that interests me most at the moment. Let's get some charts up here and some other stuff. Where's my Mr. Charty? Oh, we're going to break anyway. But when we come back, bloggers and financial bloggers, are you safe behind the shield of being part of the press? So far, that's a little dubious, but we'll be back in a moment and talk about it.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Anyway, got a lot of questions about my past, but always interesting. Yes, I lived 10 years in Hawaii. At about 3 months old, I went there and came back just before, I think, Hawaii Five-0 started in 1971, because I remember coming over and seeing it and thinking, that's interesting. I just left there. But I think it started the year after we left, probably pretty close around that time frame. But fairly interesting. And my dad was a pilot, flew a lot of different things. Most of the time in the 10 years we lived in Hickam Air Force Base in Hawaii, he flew a U-2 or a variant of that U-2. And at one time, he was flying it through nuclear blasts down there in the little islands that they were blowing up with nuclear bombs. And later on, probably a lot of stuff he couldn't tell me about. But he did that for a while, and then got pulled back to the middle of the United States, and a year later sent to Vietnam after 25 years of doing kind of black things, flying around a lot of CIA agents and that kind of stuff. So he was always doing those kind of cloak and dagger things. Showed me the little pins that you pricked yourself with the cyanide and the tablets. Showed me all that stuff. Always interesting. But I digress. Again, we're digressing here on a day like this. And, what I wanted to get to is I had a question about why I thought the markets would be a lot smoother on the way back down if the markets do crack here in the next few days, which is what I'm looking for. And there is an answer. And that answer comes from something called the CBO implied correlation. And I'll show you this chart. It's actually kind of hard to find. The data is around, but since a lot of people don't use it and it's not brought up a lot, it is a bunch of people talk about it. The symbol is KCJ, and the only place I've seen it, a chart of it, is on Google Finance. But I use the data in my model also, but it implies how many stocks are moving together when the market moves up and the market moves down. Basically, if it's totally correlated, you're probably going to see this thing at about a level of 50. And it can go, well, like in the 52 weeks, a low was 45 and the high was 74. What you get in this is a real indication of the movement of when stocks are correlated and they aren't. When just a few stocks are moving and moving the index, opposed to almost all of them. I like two indicators in this. The first one is the summation index, which is another good way of looking at it. Of course, that is 2,700 stocks in the New York Stock Exchange. This CBOE is only the 500 stocks in the S&P 500. But, of course, if you're trading the SPYs or something like this, maybe a much better idea about how many stocks are really moving with the index itself. You can see this thing hit a high just about where we covered our shorts right after the 1st of February. Hopefully everybody can see that. Maybe I can zoom. Is that zooming in or zooming out? It's changing the aspect ratio. Maybe you can see it better there. Hopefully everybody can. Yeah. Anyway, it is that. The symbol on it, of course, again, is the KCJ. If you want to know more about that, you can go to the CBO website, and they've got the JCJ and the KCJ. These both are basically looking at symbols. But it's the same thing. It's basically looking at the correlation of how many stocks are moving with the index itself and how far out they've gotten. And, of course, when these things get out very far, they tend to show a choppy market instead of a trending market. This is one of the things that I looked at before I covered those shorts back down around the 1740, 1750 level. But my guess is that the next one is probably going to see correlation, and that means generally a slower but trending market. Now, maybe it goes up or goes down, but my guess is that we're going to have a fairly long trend on this next leg in the market. Be back in a second. Give me a call, 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And we are back, and we've got a caller, so we're going to go right to Marty in Worcester, Mass., and then we've got Mark. But Marty first. How you doing today, Marty?
Pretty well, Mr. White, and you?
Another day in paradise. If I can get to Miami tomorrow, I'm going to be happy. They're trying to cancel my flight, and we've got the International Boat Show down in Miami this weekend. But all the planes are still, I guess, locked up north somewhere. So we're trying to find out whether or not I'm going somewhere.
Well,
but,
no problem.
Hopefully, I'm going to get down to Miami this weekend. But go ahead. We wanted to look at Vapor Corp.
Well,
VPCO.
Yes, but first I wanted to just ask you for my own silly information. I read that you have a background in animation, and there's some great new visuals on the TFNN website, on the TFNN TV, and I was wondering if you had anything to do with those.
Are you talking about the ones for the charts?
Well, no, like the vaudeville hands.
None of that stuff.
Oh.
My part in animation was more equivalent to people making desktop publishing, but there was no laser printer to get it out of the computer.
Right.
And I came up with a way that brought a machine at the time that was about $50,000 to get the animations out of your computer and onto video tape or in film in high quality down to about $3,000. So that was my claim to fame on the animation side of that business. But basically coming out with the laser printer for low-cost animation.
There's somebody doing really good work on animation on the website, I'll tell you.
Yep, we can. But anyway, that's neither here nor there. Now the
no, I mean it's just nice. It's very pleasing.
Yeah. No, it's we've got a couple of guys in the office doing that.
Well, they're doing a good job.
Well, good. No, I'll let them know. I'm going to see them here in about an hour. But let's get to this. We've got somebody else waiting here.
Right. On VaporCorp, I just want to know if I understand what's going on with it. Now, I know it's an over-the-counter stock, and it's volatile, and I think it's being manipulated and pushed around because on no news, I mean, there's a good bid under it around right where it is now, around 570, 575.
Mm-hmm. Are you still there?
Yes. Now, there's been no news. It's like a story stock. I mean, it's probably, I believe that eventually when their earnings come out, and they're supposed to be pretty good, they've just hired somebody to get it into more stores. It's a new technology for nicotine delivery that's healthier than smoking.
There's several companies in this side. I would give you, just without knowing anything about the company, I would give you two things. When you say it's being manipulated, I would say that you don't have a big enough sample size. I wouldn't trust a poll that went out and asked 15 people who the next president was going to be. We know that you need probably about 1,500 people to get plus or more minus 4%. Mm-hmm. I don't like any stock that trades under 300,000 shares. There just isn't enough sample size out there, and I've done my own studies that this says avoid stocks with 300,000 shares or less traded a day on the average, just because they tend to be very hard to predict. Let me put it that way. So I would say that part of your problem is not just maybe this being a story stock, but also being so thinly traded that if everybody's trying to get in, the doors are thin, and to get out, the doors are just as tiny trying to get out. And that is the problem here, that these thinly traded stocks will be very hard to get in and out of, and it's problematic at best, trading a stock with this low volume.
All right.
So that would be my first thing. As far as this, there's 4 or 5 companies that I know of in this sector, and whether or not that really takes off is hard to tell so far.
Right.
So I think part of it is it kind of started to get trendy. Then they started throwing it out of airplanes, even though it didn't do anything. And then you could smoke them in restaurants in New York. And then Bloomberg threw them out of New York. So you are right that this whole industry is pushed around by news. The problem I'd have in it is this is the kind of the Roach Motel. You check in, you never check out. That's the problem with it. The doors are just way too thin.
So basically the idea would be, since I already own it, to wait for good news and a spike and sell it.
Yeah, if it doesn't look that bad right here technically, and you're kind of at support, but I don't know how you would trade this thing other than you had some nice volume up, but even then the best day you had was 500,000 shares. So it's just
back a few months there was they had a 5-to-1 reverse split.
Right.
So originally it was
do you know that 90% of stocks that have a reverse split go out of business within the next 2 years?
Yeah, but that's because they're trying to stay on an exchange. This one's trying to get onto one.
Yeah, no, I know, but I mean I just wanted to make sure you knew that.
Oh yeah, I did, but the thing is they're trying to stay on exchanges. This one is trying to get onto one.
Yeah.
And
so
in the process, I just think that it went up so much. I think a lot of people are just taking profit, and the next boost up, they're just going to own everybody's shares because it's impossible to set stops under it because, like it'll be up all day sometimes, and at the end of the day, somebody will dump 20,000 shares, and it winds up down 2%, you know?
Yeah, that's what I'm saying. You can't, with this thin of trading, it's very tough. We're going to, thank you for the call, Marty. We're going to move on to Mark, and he's in the hole in the wall in Massachusetts. How are you doing today, Mark?
Hey, hi, Dave. Can you hear me okay?
Yeah, I can.
Good. Hey, you were just talking about that KCJ information, and you were referring to also talking about over a 3-day weekend that you're looking for a little correction to come about over starting next week. What do you feel about gold and all this run-up that it's been having? I mean, it's just like super gold, high-powered, pump it up, and, well, don't you think a little pullback is due? And that might work with your theory about over the long
I don't know if you heard the show yesterday.
Parts of it. I don't want to tell you something that's not true. I caught parts of it.
Okay.
But I didn't hear the gold part.
There is a thing in Elliott Wave, and I don't like Elliott Wave, but there are a few things that the whole Elliott Wave trading system had that I think was right. Maybe 2 things out of it. The rest of them probably worthless. But I did learn 2 things when I went through it. And actually, I was talking to Andy Heck about it just before the show today. But one of the things that they had that was right was a thing called the fifth wave. And I went back through a lot of big bull markets in different things, whether it be stocks or commodities. And if you have a huge move, like we had in gold from $300 to $1,800, normally you get that last big correction like we've had, and one of 2 things happens. One, it kind of floats around and then it's over, or 2, you go into that fifth wave of an Elliott wave, and of course they only say you can see it in retrospect, so you really don't know what wave you're in. But if you have a market that goes up in gold here, $5, $10 every day, just continues to do that, it normally is the end of the bull market, and it can do that on light volume all the way up. And if you go back in the charts, you can find them. If I have 4 or 5 hours, I'll try to find some. But I went through them probably in the early mid 2000s when I was looking at the Elliott wave and whether I could make any money out of it. Figured out I couldn't. I did find out 2 things. One was that rule of alternation works well. The other thing is that it is not uncommon to see a almost a straight movement, not parabolic, which I think this could end up being. But if we just look at $5, $10 in gold every day, and maybe some small pullbacks, but $5, $10, $20, and then it pulls back 15, and then it's up another $5, $10, $15, and it just does that really on a bigger view of the thing. It just never breaks down. There are many of those through the last 100 years of data that show that is the end of the market, and it just keeps going up and up and up and up, and everybody screams about it. No one ever gets a chance to come back and get into it. So I'm not saying that's what's happening. I'm saying that there's a chance that this could happen, and that is one thing that you need to watch depending on how much more this thing goes up. It's trading out at $13.19 right now.
What do you think about your 3-day weekend coming back from, that 3-day type period for this gold activity? I mean,
I think you're right. When I was talking to Andy before, we both thought that the answer in gold of whether this thing is some kind of fifth wave or whether or not this thing blows up is going to be probably late Tuesday or Wednesday. So we probably only have a couple of trading days to find out whether this thing is going to do nothing but go straight up for the next probably year, 18 months, and it's going to be $5, $10 a day or something like that, and or we go back and test $1,200. But we've gone up and did a few things that we shouldn't have done. We blew
and the
through
gold miners.
Gold miners pretty much blew through confluence levels. And that is extremely rare for the pullback that they've had. So like I think it's the GDX, 2430 should be support. And unless it can go back and break that level, I think that's probably the closest you can hope to get. What is it? What did I just say? The gold miners?
2436 GDX.
CG, what is it though? GDX, excuse me.
GDX.
Yeah, hang on a second. But yeah, about 2430 is probably all you're going to get on a retrace if you get it in these. So normally the idea to do, or the only thing that I like or look at, now you got a doji out here today. Now, a doji in the GDX probably means one of two things. One, we've hit the high, or two, this is the halfway move of the move up. So you've got $6.40 here. That would take you to what, $32? So what that does is, if we continue moving up next week on the GDX, the next stop I'd look at would be the August 27th high at $31.35. So if I was long and I missed this, I would put a trailing stop on it and just close my eyes and just say that I don't want this thing pulling back any more than $2. $2 and maybe 30 cents or something, and just close my eyes, and that would be it. So, but I think you're going to know Tuesday or Wednesday. This thing's either going to fall out of bed or just continue going up, and if it goes up, this thing's going to run to 31.35.
Let me ask you one question in regard to the gold price moving up. But is there somewhere along the line where there won't be the same equation for the gold miners to move up with the gold price because of some, I don't know, reasoning of they've already had their huge move. They need a little consolidation or a little retrace. Everything needs a retrace. Then or not, it becomes a,
everything needs a retrace. Everything needs a retrace except that last leg in a huge bull movement. And that's when it absolutely kills you to be in these. But I've seen a lot of stocks do it. I've seen sectors do it. I've seen natural gas do it when it went up to $15.75. That's the first time I really believed in the whole thing. Natural gas just kept moving up. And when it hit that $15.75, that was it. It blew apart. And that would be, if that would translate into gold, that's exactly the same thing as that move in 2005 or 6 in natural gas. But you're going to see that thing just go straight up. And it never retraced, huh?
Was that the hurricane season for Katrina in that period of time in 2005 in the summer?
I'm trying to remember now, and I don't remember. All I remember was that I wasn't long, but I did short it at like 1560, and it went down to 1330 or something, and I thought I was brilliant, and it went down another $5 or $8 or something, and I thought I was real stupid. So it was one of those that I was short and would have made a ton of money.
Thank you for your time.
You bet. We'll be back in just a minute.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're back. You still have quick time to get to me if you want to call at 877-927-6648. We'll check back in with these markets real quick and just take a look and see what we have. But what do we have? Up 11 points. Not even 2.2 billion shares. So once again, up at these highs, a very light volume. If you go back and look at the 2011 April, May time frame, I think you're going to get a good indication of what I think is happening here. But that's for some work for you to do this weekend. Anyway, wanted to get to some other stuff. There was some news I got sidetracked and never got back into, but I did want to talk about it a little bit, and that is people writing on blogs. And this is a little interesting to me before we leave for the weekend here, and that is that David Einhorn is suing a website that's known to a lot of people out there, Seeking Alpha. One of their contributors basically said before anybody publicly knew that Einhorn's Greenlight Capital was buying Micron Technologies, and this is when Micron was at $20. So it wasn't like he bought it at $5 and they said something. He bought it at $20, way up, thinking it was going to go much higher. And at least he's got $4 on the trade. I don't know how long he's going to hold it. But what happened was that he filed, although publicly you have to let people know that you're buying if you have a big enough position. But if you intend to buy more, the SEC will allow you to not say that you've bought that thing if you're telling him you're adding to your position. So you can get this thing that is confidential. So when we see when people are buying things and when people aren't, you'll see when they're all done. They're not always going to tell you right away. And I thought that was kind of important maybe to bring up, especially new traders that think when they look and say, hey, this stock's going up, I don't see anybody buying a whole lot more. You'll eventually see that filing, just like you saw with Greenlight Capital showing up for a Micron. And that was one part of it. The other part is what you can say and it not be discoverable. They are asking Seeking Alpha now to give the name of that blogger because only about 5 people knew that he was buying that position. And someone would have had told him that. And he's going to go after that and sue. I guess they're going to sue this guy and find out, I'm assuming it's a guy, and find out who ratted them out before they were done buying their position, that Greenlight was buying Micron. And I think it's going to be interesting in the past whether bloggers have the same kind of rights to not talk about this kind of stuff in the press. With having the shield that a traditional newspaper person would have. But it is, to me, it is interesting. And we'll be finding out more about this. But 2 sides to that story. But just remember that when you see these 13Ks and everything else being filed, I think it's a 13K, isn't it? Yeah, 13F, excuse me. When you see those 13F filings and they roll through at 5 o'clock at night and you find out that so-and-so has just bought 5 million shares or something, it's not always that he just bought it. He may have been buying it, and if they have over 5%, it has to be put in that night. But if they have 4%, want to go to 5%, they may get 30 or 60 days before you see that in the listing. So just thought I'd pass that along. Anyway, you have a safe, wonderful weekend. Remember, sell when you can, not when you have to.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.